There's currently a lot of negative news about Tesla, and we saw Tesla sell down in the past trading session. But of course, Tesla was not just selling down there, it's been selling down before the end of the month. Unfortunately, many investors and traders just believe the price will go up regardless of anything. It would be nice if things work like this, but they don't work that way. Price is always moving in a wave, and it's always moving between structural support and structural resistance levels. That's why, as a global family, we do these CTKS paths. They prepare us for negative price momentum, as is often the case inside financial markets. But these paths are structurally drawn. They're not drawn to price, they're drawn at the start of the month and then not changed. We are not seeking to predict price as it travels throughout the month, but often we will see that prediction come true. Specifically, we look for CTKS levels, also called Stanfield levels or SLs. When you get a clustering of SLs, they're stronger. So the more thicker the line, the more clustered they are together, the stronger they are. If you get a gap, price can move very, very quickly to the upside and can also move very quickly to the downside. These areas are called CTKS gaps, and they get filled time and time again. There is a lot of volatility inside CTKS structural gaps, so it's very important you know where the gaps are. You can get the structural indicator for Tesla and 32 other charts at ctksmethod.org. One thing that we knew from Tesla's price behavior, it was sitting on a CTKS structural support level. The very bad news that occurred between Elon and President Trump caused Tesla to sell down. There was a tremendous amount of panic. When we look at CTKS paths, we're looking at structured movement between CTKS levels. This is very important because if you don't have this structure built around your charts, you simply will not know where price is moving. You'll not know where the institutions and algorithms will step in to support price and when they will step out and sell price down. The other thing to note, when you do your CTKS paths, which requires level 2 standard certification, if you find that structure turns and stops going down and starts going up, that is because that structure cannot be passed through. These are structural turning events, and they indicate sentiment is changing inside the market. You definitely can have all green or all red months. And the structural paths should be done at the start of the month. Just draw them up and don't change them. You draw the structural levels based on CTKS structure, so it makes your predictive power much, much greater. You're less likely to get caught on the wrong foot. And the thing to always remember, it's the interaction with the CTKS levels that is your key. Just taking a small snapshot of the structural path levels for this month, for June, we can see Tesla has had and indeed a structural overshoot. We would have anticipated Tesla be at around this 284 in a few days and not now. Just keep your eyes on the structural levels. To explain what I mean, I'm going to swap across to Bitcoin. Understanding and knowing where strong structure is incredibly important. Bitcoin is a wild asset class, and as soon as President Trump came out and said we're going to put a 50% tariff tax on the EU, the markets have been weakening. There was the potential of the court coming in and saying the tariffs are illegal, but that was quickly thrown out. And what we can see now, Bitcoin itself, which is one heck of a risk-on or risk-off asset class, is currently under pressure. Now, this under pressure will continue until morale improves. Now, what does that actually mean? Morale improves when we start to get above that 104 and preferably higher. One thing that you've got to make sure that you don't get caught in fake outs. Also, a lot of people will just naturally assume that there's structural support around this area. In fact, there is no structural support at that area. It's above it and below it. But with level 1 and level 2 standard certification, you can mark up your charts and you can see exactly where the structure is. Now what I'm going to do is just pop in, zoom in here, and we'll look structurally. Our global family, when they see these big red candles down, we know instantly there's a negative CTKS gap afoot. But is this backed up by the month's indicator? Let's just have a quick look. So we can see around that 104,711 mark, there was quite a lot of structure playing in here, and we saw weakness after weakness after weakness after weakness. A bit of a push up to liquidate people on the wrong side of the trade, and then we dropped down to structural support around that 100,843 mark. We've seen a bit of recovery throughout the past trading session. This is primarily because these negative CTKS gaps can turn into positive ones. And basically, seller exhaustion can turn into buyer relief. Just zooming out a little bit more, we understand that Bitcoin is under negative price momentum. So that particular wave, we could consider that's going to continue on. That's a very conservative opinion, and it's a good one. When we think about the 98,700 mark, that's a good area for structural support. If there's a lot of negativity inside the market, you will require more and more CTKS levels to capture and rebound price. Just literally just like we saw here, those negative CTKS gaps cause structural overshoots, or SOs, until we find more and more levels where we can rebound price. I would also suggest you pay a lot of attention to the S&P 500 and the Nasdaq structurally. Popping across to total crypto market cap, one thing that we note, the entire crypto market cap is currently retracing. It is in a downtrend. The key for us is to know where the structure is. When you see God candles like this, they point to CTKS gaps. And the good thing is we know where these gaps are. I've just put on the indicator, and you can pick up this indicator from ctksmethod.org. One of the things that we've seen as Bitcoin came into structural support, we had that rebound across the entire crypto market. Now the crypto market is heading into resistance. This is a very important factor to consider. Also, we do have a negative CTKS gap below where the current price is. If we fail to get above here and start to repair, and fortunately we have a positive CTKS gap there, but if we fail to do that, please be aware that negative price momentum could be harsh. Always just embrace the market realities. And what you want to do is to take advantage of those realities as well. I would always recommend doing your paths, because when we look, for example, at Ethereum started around the 1800 mark, and we had a positive target at around that 2700 mark, and it accomplished it. We are always ready for the upside, for the neutral side, and for the downside. And you can see with ETH last month, it didn't go down pretty much at all. This is why it's a really good idea to do your CTKS structure first, learning to read between the charts and seeing intercorrelation and interconnection is vitally important. Make sure you look far and wide, understanding the market's messages that it's sending. With all of that, it doesn't matter what price does, because we can be calm. We don't have fear of missing out or fear uncertainty and doubt, because we are simply looking at structure. Structure defines the waves up and the waves down. Just keep your eye on the structure and you can take advantage of down waves. After all, it's far easier to make a good percentage after price retraces back to structure and you can ride it up again. CTKS traders and investors absolutely love the red days, because that means profits, that means discounts. Getting on the right side of the percentage is worth a fortune. And you'll find the more that you trust the levels, the less emotion that you will feel and the more profit that you will make. I'd like to give you a little bit of insight into some price behavior that's very typical. When we look at Doge for the past month, we saw that Doge was going on the positive normalized price path and then struck overhead structural resistance and failed. But this was because of the main markets coming down as well. Doge does not trade independently of other charts. Which brings us to this particular price pattern. You can see here we had an explosion in price way above the normalized price structural levels. What typically happens when this happens, we have buyer exhaustion and then a slow grind downwards. But it also happens the other way. If you consider its mirror image, like this, for example, like that, and like this, and like that, these are things that you really want to pay a lot of attention to. Since this peak, pretty much just up here, Doge has come down 33% or nearly 34%. Typically, what these candles are really good to do are to trap people on either side of the trade. Either side meaning that pull the shorts in or pull the longs in. You just want to be aware from a structural perspective, when you get structural overshooting, you will get mean reversion. The major problem for Doge could have pushed up in last month and finished on the positive price path, but because of the tariff news, that caused all charts to descend. One of the problems with financial news is it's up one day, down the next, and it's just trying to understand where price is going. But price is always moving in a wave. It's going up, it's coming down, it's going up, it's coming down. You get the idea. Now, the June 9th deadline on the EU tariffs is something that you really should be paying attention to. You might get some incredible bargains if we're lucky, but structure will tell us right in advance. So far, we're seeing negative price momentum enter the markets, and this is something that you must be aware of. If the markets are trending down, just adhere to that trend. Always keep your eyes on structure. Even if things are coming down, you can do incredibly well going long at spot. If you want to use leverage and derivatives, absolutely, but please make sure that you can trade at spot for at least 10 profitable trades beforehand. The logic behind that, if you're just getting in with all due abandon into leverage trading, you may find that you wipe your account out, because although the gains are magnified, the losses are also magnified. I'll keep you updated throughout the next month on structural levels. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.